Hi everyone, and welcome to the latest installment of my client market update. I hope you're all keeping well, especially my fellow Victorians. I know this isn't exactly where we want to be at this given time, and obviously it's just another challenge for us to deal with. And what we just need to do is keep taking this day by day, and hopefully we get some more positivity and start to move in the right direction. From a market perspective, we've had quite a few movements in the past month and a half since we last caught up. So let's get into that to see what's been happening and what kind of trends we've been seeing. So in terms of the data actually hasn't been, I guess, overall as bad as what people were expecting. We're starting to see some manufacturing and some GDP numbers and the like starting to come through. And what we're basically seeing is that although they're not shooting the lights out, which is definitely not what was expected, things are also not, I guess, as dire as what was forecast. So we're starting to now see a little bit of positivity around the world. We've seen, retail has been holding up quite well, so it definitely hasn't stopped people from buying whatever it is at this stage. And it seems, online sales, etc., being, quite strong. So that's, quite a positivity there. China recently came out with their latest GDP figures for last quarter, and they've actually avoided a recession. So they had a growth of 3.2%, which beat expectations of 2.4. So even the 2.4 itself was, quite a number that people thought was a bit unrealistic. But for them to get over 3% last quarter is, quite phenomenal there. So that's really good to see that China. As we've seen, they were the first to get hit by the virus, and I guess the first at this stage to get out of it. We're seeing that they're bouncing back quite strongly, so that's very good news, and hopefully, I guess hopefully a forecast for things to come around the world. So the markets have been moving a little bit sideways, maybe in the past, few weeks in a month. So we're now starting to see a few things in the sense of, okay, well, where are we going to take the next steps? What kind of data can push us one way or the other? I've just got down there at the bottom the PMI figures. So they're basically the manufacturing levels in the US, China, and Europe. So when we have data that does come out, there is expectations as to whether or not manufacturing is expanding or whether it's contracting. So simply a number of 50 is neutral. Any number that's below 50 means it's contracting, and any other above is expansion. So we can see with the latest numbers that came out there, the US had an expected PMI that was going to slightly contract. However, it beat expectations and it actually grew, and you can see that at 52.6. China, so stayed pretty stable there, just a slight increase of 50.9, however, definitely better than a contraction. As you see with Europe, they were the only ones that were expected, and actual PMI was in a contractionary state. So we'll see how the next round goes to see if we can get all to be in an expansionary state. I got this graph together because I thought it was a great highlight as to, I guess, where the markets have moved since basically the start of the year. And what I've done is compared some major indices to really highlight, where I guess the money is at the moment, and where the trends have basically started to show themselves. So firstly, what I've got there is the S&P, the ASX 200, so the top Aussie businesses graph there. So you can see since the start of the year, we were having those good gains. We hit record highs around mid-Feb, got past the 7,000 mark. And then obviously, as you can see, the virus hit and we had quite a steep and rapid decline. We got towards the end of March, and what we basically then saw from there was a backup from the Fed, from the RBA, all those basically starting to state that they were going to basically do whatever needs to be done to get the economies running. So buying bonds, putting a lot of liquidity into the market, reducing interest rates to record lows, and as you can see, that the bounce back has occurred from that. But in saying that, the Aussie market is still down, just a bit more than 10% since the start of the year. So we can see that it did have quite a good bounce back, but it's still yet to, I guess, get back to at least neutral territory. Now, then what we do is we compare that to how the American market went. So in the green is the S&P 500, which is the top 500 American businesses. So very similar in terms of when it dropped and its return, but you can see that the American market has recovered a lot better than the Aussie market so far. And that's purely just been a case of, I guess, a lot more money getting pumped into their system, and I guess the types of businesses that America has versus the Australian side there. So not quite at neutral yet, but not very far off whatsoever. But then what we do is we look at the, I guess, the more tech-focused NASDAQ index in America. So this is where a lot of the big tech companies are listed on, and you can see that they had, once again, a similar drop-off, but their return has been very, very rapid and much higher. They're now over 10% higher than what they were at the start of the year. So it's been a phenomenal return for them, and we can really see that what has happened is the tech stocks, as we've spoken about time and time again, is that they are holding up extremely well in this environment because this is playing into their hands. We're becoming a much more mobile, tech remote-based focus around the world, and this is just really ramping up the revenues and the subscriptions to these types of businesses. The other highlight there as well is the Chinese market. So the China CSI 300, that is replicating the Chinese, the biggest 300 companies in the China market there. So you can see what happened with China in January. They actually had their drop off a lot sooner than the rest of the world because they, as I mentioned, were the first to get hit by this virus. So they had that initial drop off and then they traded sideways for a little bit. But you can see in this past month, they have absolutely really taken this in their strides and really started to skyrocket there and have matched the return of the tech side of things in the American market there. So we can really see that there is strength in the China market and the tech stocks, and that has played very well into, I guess, our hands from our portfolio management perspective, because we do have very decent exposures to both of those markets there. So it'll be very interesting to see what happens, obviously, moving forward. As I mentioned, we're going to have more reports and things like that come out soon enough. So it'll be really interesting to see how the markets continue to maneuver from here. This slide highlights a bit more about, I guess, where we're seeing things with China. We've spoken about this for many years, and I'm sure this is, I guess, no breaking news to yourselves, but it's just to reiterate just how important China is to, I guess, the thematics that we are looking at and to why we feel it's very important to be exposed to businesses that deal in the Chinese market. You can see some of these facts about China. There's either a 2 or a 1 next to them, and they're not going to be far off by taking #1 spot on so many of these KPIs. Just in the last decade, China contributed 1/3 of the global growth. So it's just phenomenal just how much they make up in terms of the growth and the the prosperity of the world as a whole. There's been rapid urbanization there. This is obviously continuing to increase their middle class, and what that does is gives them disposable income to spend on goods and services, and to obviously keep that demand and those profits up for these businesses that deal in the China market. Just some of our stocks that have exposure to the Chinese market, whether directly or indirectly. We've got quite a list of businesses that are going to be riding on the coattails of this China boom that's going to just continue for many years to come. So you can see the likes of Alibaba, Apple, Nike, etc. They are all businesses that are very much going to benefit from this. So this is what we are definitely keeping our eyes on, and all these businesses are held within the portfolios. So these are the types of things that we really want to keep an eye on. In terms of the portfolio changes in the past month and a bit, so you can see there's been a bit of movement. We in the past month and a bit, we did take on a little bit more in terms of the businesses that we were buying. So more cyclical stocks. You can see the likes of Anglo American and Lind, so BHPs, BlueScopes, etc. So more material stocks, more ones that are going to be, I guess, exposed in the sense of getting the world back up and running and getting those materials to basically assist with that. So quite a few, I guess, more buys to bring out, I guess, our holdings a bit. And now we're more seeing, I guess, to hold a bit more of a neutral stance, to take a bit of a break, have a breather, and to see, where the world takes us next. And speaking of which, we've got, as I mentioned earlier, we've got some earnings seasons that's coming up both here and in the overseas markets. So we're going to start to see this information trickle through over the coming weeks, and very big names releasing their figures from the last quarter. So it'd really be interesting to see just one, not so much, I guess, what has happened, because we all know that the numbers aren't going to be quite pretty, but more so about their outlooks in terms of the demand of their types of goods and services that they sell, and I guess the overall barometer of the health of the corporate sector. So we're still going to see some volatility, more so with individual stocks, to increase during this period, as some companies are going to perform much better than others. So we're really going to find that there's going to be a divergence within different businesses and sectors that are either going to be doing really well or going to be doing quite poorly. So it's very important, once again, that we try and stay within the right industries and the right businesses moving forward. So this is very important to not just, I guess, look at the market in general, but to look more specifically at certain stocks. So we'll see how all of that pans out. It'll be hopefully some good news to speak about the next time that we catch up, and hopefully we'll be out of lockdown in this 6 weeks that has been initially slated, and we can hopefully then get Australia all on the same page moving forward. Obviously, if you've got any queries whatsoever, please don't hesitate to contact me. You've got my email, my mobile. We are working as per usual. So please, as I said, don't hesitate to contact us. If you have any family or friends that you feel may have any queries or assistance that we can provide, we know there's quite a few redundancies and the like starting to be happening. If people do have queries in that respect, we are more than happy to try and help where we can. So you have my details there to pass on. Otherwise, best wishes, and we'll speak to you very soon. Thank you very much.